Clouds continued to clear in the Eurozone on Monday as data showed inflation easing and a return to economic growth. In a comforting sign for the European Central Bank, consumer prices grew by 5.3% in July. That versus 5.5% in the month before, extending a slow trend which started in the autumn. While it's still a far cry from a 2% target, the latest figures may help policymakers decide to skip an interest rate hike after the summer. Analysts say the further fall in inflation could point to a clear but gentle downward path. The ECB raised rates for a ninth straight time last week, but President Christine Lagarde flagged the possibility of a pause in September.
Could be a pause.
Stubbornly high prices for services and food, however, may mean that pause is short-lived. Whether to hike or not is a dilemma for policymakers. It could take until 2025 to reach the ECB's 2% inflation target. GDP data on Monday showed that economic growth in the Eurozone is doing better than expected. The second quarter expanded by 0.3%, demonstrating some resilience in the bloc as it returned to growth. But that relief is unlikely to point to a strong 2023. Continued pressure of interest rates and a drop in incomes sees analysts forecasting a weak end to the year.